English shorthand 120 words per minute. Legal passage. Book code LPB1 of National Shorthand School, Vizag. Passage number 17. Please get ready. Start. Our present system of taxation has been the result of an evolution from circumstances rather than from a strict theoretical system. At the present time, we are too often accustomed to look upon taxation as a means of profit sharing with persons who have money rather than as a means of producing the necessary revenue to maintain our system of government. The present tendency is towards increased expenditures by the individual, city and state, while in our industrial development the tendency is towards the curtailing of expenditures and economy in methods. The state of Massachusetts has been continually increasing its powers until now. It takes care of criminals, the sick, the insane, provides the military power and makes large expenditures for educational purposes in addition to the ordinary expenses of maintaining the various branches and departments of the state government proper. To pay these expenses, the state collects for itself a tax from the savings banks from certain persons receiving property by will or descent, called the collateral legacy tax from insurance companies, and 1/4 of the fees received by the cities and towns from their liquor licenses. By far the largest amount, however, collected by the state is from corporations. This is called the corporation tax, while the cities and towns collect a tax on the real estate and machinery of corporations located therein. The great value of a manufacturing corporation, in addition to its real estate and machinery, is its ability to make money. The silent and buildings are worth comparatively little in comparison with the live active producing capacity of a mill or railroad in operation, and as the state creates and controls the corporation, the state collects a tax on its value as a living concern. Out of 90 lakhs dollars collected last year by taxation from these various sources, the corporations paid nearly $6 million. This, however, is not all retained by the state, since the state returns to the cities and towns where the stockholders who own stock in these corporations leave their proportionate share of the amount collected from the corporations. But if the stockholders live outside of this state, then the Commonwealth retains for its own use the taxes collected on the shares represented by such foreign stockholders. The state returned last year to the cities and towns about $4.5 million of the amount collected from the corporation tax, thus retaining from this source about $1.5 million for its own use. But all these sources of revenue after the corporation tax was returned to the cities and towns would have left a deficit in the state treasury if the state had not levied what is called the state tax. This is a direct tax imposed by the state upon all cities and towns in the Commonwealth and amounted last year to $3.5 million, levied on the basis of the value of property in the various cities and towns. Boston paid the largest state tax last year, amounting to rupees $1.26 million, and Gay had $35, the smallest. This state tax is added to the regular town or city and country tax, so that last year everyone who paid a tax on $1,000 to the city of Boston paid $13.20 for municipal purposes, 90 cents for country purposes, and $1.70 for state purposes, which includes the metropolitan district and armory expenses. Some time ago, the suggestion was made that the state should retain the whole of the corporation tax and collect no direct state tax. Then the cities and towns, aside from country expenditures, would only raise money for their own purposes, and the state would have the entire benefit of the corporation taxes. It was found, however, that this would affect the cities and towns to so large an extent that the special committee on taxation of the legislature, which has been investigating the subject during the summer, has proposed a compromise and recommended the keeping by the state of so much of the corporation tax as is derived from public service corporations, stating in its report as follows: the principle that personal property follows the domicile of its owner, and should there be taxed, whatever its value should have little or no weight when the personal property involved represents none other than the tangible assets and franchises of great public service corporations.